the University of Arizona. Costly financial mistake highlights why proper accounting is important. And people are being increasingly paid for not working. And do you know how much it would cost the world to have one day without internet?
I love this topic.
Yeah, it's a lot. So good morning, good afternoon, good evening, wherever it is you're coming from, FinTech Flow viewers, wherever you're listening. We're glad to be back. It's been a little while since we've had an in-person session.
Good to see you again, Drew.
Yeah, we're still churning away. I feel like fall's kind of like our busy season in a sense.
For you guys, I was getting caught up on everything you're working on right now.
Yeah.
It's a large plate. I hear there's some Gantt charts involved now and really getting some planning on the workflow side.
Oh yeah, we're using Excel documents, we're using Word documents, we got PowerPoints, we've got Asana, we've got all of the different elements.
Love it.
Trying to do as much as we can. And that's the thing that comes to like when it comes to fall, especially like corporate companies, right? You're trying to get everything finished at the end of the year, close out strong. Simultaneously, you're trying to plan everything for the next year.
Yep.
And that's the crux.
Yep. It's a beautiful time.
All right. Well, with that, let's get flowing. So as always, I am your host, Drew Carrick, philosopher, CPA, pickleball player.
Oh, you're moving up. It is the fastest growing sport, I hear, in America. So there you go. Mike Whitmire, co-founder, CEO of FloQast, inactive CPA.
Yeah.
Yeah. I'm there.
Golfer perhaps.
Golfer, I like to do that. Got another zip on today. Yep. So
we love that.
That's it. Pretty basic, dude, though.
But yeah, so we'll be finishing up season 1 of the FinTech Flow next month with episode 20, a year in review. So we'll look forward to next year at that point. And if anybody has any questions that they've accumulated over the year, feel free to send it in before we get to the last.
So that's how we're going to do it? We're going to do like a year as a season?
Yeah, I would say so.
That's an interesting setup. Okay. Yeah, I like that. Yeah.
And this is perfect because this is episode 19, so we're about to get on to episode 20. And we've got a lot of exciting stories happening here over the last month since we did have a little bit of space working on a bunch of super secret projects here at the studio. So it kind of had us occupied, but accumulated a lot. So there's definitely a lot to churn through over the course of today to get everybody up to date on what's been going on in the profession, in the finance world, in the tech world. The first one coming from accounting today, titled Creative Disruption in Accounting. And this one came from actually the end of October, so it is a little bit dated, but the interesting thing was it highlights something which we were talking about earlier before we got on the podcast, which was about billable hours versus value of a project and just being paid for that. And the creative disruption that's happening in accounting is basically attesting to how accountants need to get more creative, not necessarily in their job, but as they view the profession, in how can they position themselves to be more financial, future-oriented. They're looking at things from changing the narrative around what it means to be an accountant and what sort of value can you add. So from the article here, the days when accountants only had to worry about competition from other accountants are long over, with forces outside the profession increasingly mobilizing to sap market share from traditional firms in a bid to disrupt the industry. Mm-hmm. One of the things that we spoke about that our general counsel had brought up, Eric, was about lawyers potentially moving into the space of the compliance realm as you had to review contracts if that becomes part of the profession. Mm-hmm. So, most tax tasks can be heavily automated at this point, only to become almost instantaneous with AI, and many audit and assurance tasks can also be heavily reduced in the time it takes to complete. So to stay competitive, firms and professionals, I think, are finally seriously discussing a shift in the business model to value add versus billable hours. And they're viewing services beyond just the scope of, obviously, the regulators are requiring this around public companies where you need the CPA stamp of approval, but other professions, due to the lack of accountants, mm-hmm. are starting to kind of creep in on like, well, we can kind of do some of that compliance work. We don't need, as long as you don't need the CPA sign off, maybe we can come in and do some of that advising.
And lawyers doing it is going to be at probably a higher bill rate than accountants doing it. To me, it's a matter of, are there enough accountants to take on this amount of work? I was learning a lot about ESG last week and how much time that's going to take from the accounting department. It does appear as though it makes a lot of sense for accounting to do that work. It just is a lot of work. And it's we talk about the talent shortage all the time, and that's a very real thing here. But the move towards project-based pricing when we were talking about it in a different context, I think in the terms of day rates for actors versus the project and everything. But it's an interesting thought, just like regardless of what field you're in. I would say the higher the hourly rate, the more expertise goes into whatever's being done. Is that, you think that's a fair assumption?
Yeah, for the most part. I mean, I'm starting to question everything now at this point.
That's fair.
Because it is true. I mean, I definitely understand. I mean, it's most highlighted when I think it comes to, we talked about this, if I need to design a logo, it could take me, I don't know if I'll ever get it done, because I'd have to like learn the program from scratch to figure out how to actually design it, learn the theory of the art, and then do it. So it's not a matter of how long does it take to do that task, because somebody who knows what they're doing can do it in a half an hour. And somebody who doesn't know what they're doing will probably take 4.5 years to do the same thing, because they have to go back to school and learn it.
I guess I'm referring to the optics of it. I think within our society, we think that the higher the hourly rate is for something, the more rare or valuable that skill set is.
Yes.
Like there's a reason we have minimum wage, and then there's a reason tax partners who can save you ungodly amounts of money. Like, I have a family member who does that, and as such, they can bill $3,000 an hour, and it's worth every freaking penny to the client because of the expertise required. Now, he doesn't have a ton of clients. That's how it works. So that's how it goes. But hourly rate is higher with that. And then the number of hours it takes to complete some job. I feel like when you start pinching people and saying, why do you need that much time? I could blah, blah, blah. You're then like punishing efficiency around it. And then the motivation is you're not aligned on incentives. Like, you want the lawyer to spend more time doing this stuff so that they can make more money. Like, how do you kind of meter that? So I've always been a fan of project-based pricing, just like forever. And it seems like with about 5 or 6 years ago, a lot of these like accounting, what felt like multi-level marketing scammer people started hopping on about how to build a practice and use monthly based billing where it's a flat fee. It's not hourly based. I was like, okay, I agree with that. I mean, I hate that it seems like you're running a pyramid scheme here for all this kind of stuff, but that makes a lot of sense to me. And that more aligns to the value that you're providing, which I think goes to your point around like, it's how much education and time went into learning this work. And it's not about the number of hours it takes, but it's the value that you're delivering to the client. And is it fair to summarize that in the number of hours and be punitive around technology? Or is it better to pay for the knowledge? And like, I even think about tax calculations being really automated. Yeah. But if you don't know anything about accounting, are you comfortable doing that?
Right.
Are you going to be confident submitting that to the IRS and going from there? So I don't know. It's a rapidly changing world. And I think moving away from hourly rates is a big thing, more aligning to value.
I think as long as there is a focus on that discovery period, that initial scope, because that's usually where there's the biggest mystery is like, I don't know how much is going to be involved in doing this task. But I think if you have to spend the time, and it's got to be an accepted piece of, I mean, it's an accepted part of business, is that you're going to spend a half an hour to an hour on this discovery thing that nobody's really getting paid. And perhaps you're even providing value to a client on direction of how to proceed and in the hopes of eventually winning that business. I kind of think about it now immediately integrated with how actors are asking for getting paid for showing up to their auditions.
Really?
Right. That's one of the sticking points of the union thing, was like, well, you used to get paid when you showed up to an audition. Now you're submitting self-tapes, which is arguably more work on your end because you got to film and cut together your tape and then set it in. But you're not getting paid for that, right? So you could spend all day submitting self-tapes. It's a bunch of work that you're doing, but you're not getting paid. And the studios used to pay.
I didn't know you got paid to go on auditions. Interesting.
Yeah. So, I mean, I'm not completely into that realm to the extent, but I know that was one of the big talking points of like, do you get paid? If you look at it, and this is the interesting thing about the difference with the entertainment business world and then like the traditional business world, because nobody ever is like, oh yeah, I'll pay my accountant to like, but I'm looking for a new accountant, so I'm going to have 10 of these places come in and talk to me and say why I should go with them, and I'm going to pay them for spending the time with me, because you're technically paying for a CPA's time to be there to discuss something with you.
Totally. All right, was not aware. That's really. And of course, they try to find a loophole and keep going with tapes to save a little bit of. That's so frustrating. An audition has to be so much better in person.
Yeah.
Versus over tape.
Oh, 100%.
I can't. Yeah. All right.
But yeah, so a lender, just as it relates to CPAs performing audits that require their sign up by regulators, but a lot of assurance doesn't. A lender looking for assurance on a business that they're loaning to, do they need a CPA to go do the full in-depth audit, or will there be ancillary professions? I mean, if I'm a CPA firm, I'm going to start thinking, well, perhaps I can expand the scope of the firm, and right, there is a division that is the regulatory sign-off area, but you really have to start to individualize and create sectors where you can attract people to your firm who are just maybe more generic business majors or finance majors. I mean, heck, my brother's just like a general business major, no specifics at skill. You could probably teach him how to do some of this monkey work.
I'm a business guy.
Right? I'm a business guy.
I'm doing business.
So, I think, what's the opportunity for accountants for this shift? And showcasing as an accountant, you can offer more than just bookkeeping, tax, or audit work is key in becoming a trusted advisor. You want to deepen the relationship with your clients to showcase, this is what I talk about getting creative. Like, I can do more than just those 3 things that you think I can do.
Yeah.
And that's, I think, just at the core level, that's what accountants need to show in order for the profession to move forward.
Yeah, I would, in fact, your man on the street interview, realize a lot of people think that accountants help with wealth management and I found that part pretty interesting. And so I think positioning yourself as really a part-time CFO is a good way to have this whole discussion. Just say, we run the full stack, so we'll be your CFO in accounting. We charge a fixed fee, we're $5,000 a month, which is roughly a fifth the cost of a CFO, but you get my time. And, some months we'll spend more hours, some months we'll spend less hours. It evens out. We feel like that's a fair rate. And that's like kind of a reasonable pitch. And instead of $180 an hour for this staff, I'm $400 an hour, and we're going to add it all up, and you're not going to. And then also clients like the certainty of how much something's going to cost.
Yeah.
Right.
I mean, I love that. I like to go into a store and not know how much I'm going to spend on stuff.
Yeah, or get that surprise bill for $15,000 one month.
And that's a very accountant trait. Accountants are, and this is why people come to, why is there a perception that accountants are wealth managers? Just because we're good with money. And then, I don't know any accountant that's just not good with money. Like, it's second nature. You don't think of it as like a skill or a technical profession that I can go advise people on. I was like, I'm just good at not spending more than what I make.
Good for you. I'm not. I'm not good in my own personal accounting.
Okay, well, that's why you're an actor.
I completely well, it's real bad. Anyway, let's move on. I sure.
Speaking about spending, we might be able to spend a little less because cooling inflation likely ends the Fed rate hikes. There was a mild October prices report unleashed, and the stock and bonds rallied at that point. So consumer prices, it does seem to have fallen from a year earlier across the board. Across all, both the UK, the US, the rest of Europe. Netherlands really crushing it. They actually went down versus in all our places. At least it didn't rise as much.
Deflation. You hear deflation talked about as a bad thing, so that's interesting.
I think when you've inflated this much, you don't mind a little deflating.
It's come back down. Like I was gonna say, that's what's interesting about this is it's not like prices came down. I mean, if you look at this, it's still the overall CPI increase is 3.2%. I'm looking at that bottom right number. Right, that's 3.2% off last year's October, which was already up a significant up over prior year. So how good is this? Whatever. I don't care. Whatever it takes to get people for them to cut rates.
That's the thing when you have to do. And
whatever.
That's the important thing you have to do, I think, when you look at all these charts, because you look at just a quick cross section of it and you see, something's gone up, something's gone down. When you zoom out and you look at it over the course of all of time, and you suddenly realize you're looking at just a small little hill on top of a giant mountain.
So let's see. Gosh, like this, since it's not a compounding number, I was going to say, I wonder what this number is since 2020. Like if you went back to the start of COVID, how much has it gone up? This chart shows the compounding number it's not the compounding number. I'm trying to get to that ultimate one. Have to run the numbers.
But yeah,
I can't do this in my head, but that seems like we'd be up a rather material percentage since COVID overall. And then we're celebrating only a 3% increase on that.
Right. Yeah.
Increase, whatever.
But yeah, this is from the Wall Street Journal.
All the way back to 1935 and see how much.
We can start back there before it all started. Yeah, customer prices overall were flat last month and rose 3.2% from a year earlier, a slower pace than in September. Labor Department had reported overall inflation hit a peak of 9.1% in June of 2022. So basically, we're just being like, we're not as bad. We're moving in the wrong direction, not as fast as we previously were. Because I think they're targeting, they want to be around like the 2.5 mark, and they say that's pretty safe for us to be inflating at that rate.
Feeling good at that clip?
Yeah. So you don't have that way. You don't have stretch marks. If you inflate slowly, you don't get stretch marks.
Makes sense. Well, I do have a bit of a. Not sure if I mentioned on this podcast, I'm starting to develop a theory that I think interest rates are high, not because of inflation, but because we can't get people to buy our debt. and we have to offer higher rates because there's more risk around U.S. Treasuries right now. And then that kind of played out at the last Treasury auction. They had a hard time finding enough buyers for our Treasuries. Have you ever seen the Treasury, like the auction clearinghouse? You go to, it's like treasury.gov or some shit, and you go and you like bid on various bonds for like to buy from the government. It's fascinating. You should just like check it out. I hope. Well, it depends on if you believe in the full faith of the U.S. credit and full faith of the U.S. government. But if you want to attract other governments to buy U.S. debt, got to have higher interest rates. And so is that why we have to keep rates high to get people to keep buying our debt? Or is it for inflation? And now,
should I be concerned about the bonds that I have from 30 years ago, my ability to redeem them and cash them in? Or should I start really hustling to the banks?
I don't know. For what? This is where you get.
I want my money back.
This is full financial. This is full financial collapse stuff. Let's. I think we should be talking about so the like federal debt and interest payments and all that. Those are going to go up as interest rates continue to go up. It might be fun to do a segment here, or maybe a different piece of content around like government accounting and how it can lead to inefficiency. Like we don't talk about the accounting of government all that much. People just talk about like overspending, but the framework of government accounting encourages that overspending, and it's not something that people really understand. Even within accounting, like I was talking to Chris, our co-founder, about this a couple weeks ago, and the extent of government accounting that you learn in college, for us at least, was an 8 a.m. class, Monday, Wednesday, Friday, second semester, senior year. So like we were not really paying attention for that. And then my recollection on the CPA exam, I'm curious if you remember it this way, was they're basically like, this stuff is too hard to learn. Just try to get a couple questions right and move by it as fast as you can. And then it's like, wait, so CPAs aren't being encouraged to even learn this stuff. And so I feel like there's a small subset of accountants, and as such, the population that understands like how the books work for any government organization.
I'm trying to even recall whether I had a government accounting class or whether or not it was just like chapter 8 of 8. It was like the very last thing you touched on. Like for me, it felt like one of those, we're going to talk about this concept and how it applies according to GAAP, how it applies according to IFRS, and then like at the very end, we're just going to mention like governmental accounting. And we had the managerial accounting was a whole big course, and governmental was always just like the last thing that was ever touched on in any of the courses. Like, you're probably not going to need this, so we're not going to teach it.
You're probably not going to need that, and they have a whole. It's called GASB, right? It's a whole nother. It's a whole nother framework for it. All the there's the compound annual financial or the CAFR like reports. There's like everything's named differently, and then it's budget accounting, and so it literally. And then we've had some disturbing sales of FloQast to cities, and I see it, and I'm just like, this is part of the problem here. Like people just, it's I think we should do a little bit around government accounting.
Yeah, we could. I'll have to
open up some people's eyes. You'll have to research it
because the thing is, when it came to the CPA exam, I hedged my bets, and I said I'm just going to hope that I don't have questions on this area, and if they do, I'm hoping that by focusing on the other areas, it will compensate for the fact that I don't know these. And like, I had alternative minimum tax. I never studied that whatsoever. I just said I hope I don't get a one of the what are the questions called? The not the multiple choice, but the stimulate.
Whatever, the ones you had.
Those questions I can't even remember at this point. Yep. But those ones, I was like, I'm just going to hope that I don't get that. And if I do, then I'm screwed. But if I don't, then I save my brain capacity for things that are actually going to make a difference.
Part of the strategy of the CPA exam.
Yeah, totally. Strategy. So this last one is from Going Concern. Survey says audit fees were up almost 5% in 2022. In-person audit work is back. The average audit fees increased by 4.6% in 2022. So we're finally getting that data after all the fees were collected.
I wish ours was only going up by 5%. Well, a little inside joke at FloQast. Yeah. It seems like the auditors came back with a vengeance, and we're really digging in deep on things. I don't know if that was just a FloQast specific thing that ended up popping up with us, but we noticed. But ours was not on site this year, so that's. I know people don't want to hear. I know a lot of people who work from home don't want to hear this, but that's to me really encouraging. I think being part of a team is one of the biggest aspects of enjoying audit life, and so I think that's cool to see.
A lot of this was driven by acquisitions, and that was the increased effort. So 21% of respondents credited it for the stepped up effort, that or changes to ICFR and divestitures, so internal control over financial reporting.
Okay.
So there was additional needs, and I think a lot of this is the sort of maturing of the tech industry, and obviously it's been around for a long time, but we talk about like the boom of even around the time when FloQast kind of got started, kind of that post recession of 2008 era when there was just this big boom and money pouring into tech all the way up through to COVID, really, when all the money was just kind of pouring into it. And now we're starting to see the situations of these companies getting acquired, companies getting sold, other ones collapsing, other ones having compliance control problems, who's trying to fundraise more money, who's trying to get out. WeWork had their whole collapse and Chapter 11 bankruptcy. So there's a lot of these companies that have become like major names throughout the United States, huge in the economy, that have grown, that are now having these really complex transactions happening. And so I think it's just this increased complexity for accounts everywhere, and audit firms are sort of reaping the benefit of some of that.
Yeah, it's there's a lot of turbulence. I mean, we were chatting a little bit before the podcast, but so a lot of companies hire bankers when they want to sell their company. You know, it's like, I'm over this. I'm ready to sell the business. So they'll hire a banker. Banker will shop it to a bunch of potential acquirers, and we get those emails, you know, here and there. Within the last month, it has ramped up big time. Like today got 2 of those emails around companies that seem like they might be good fits. So yeah, looking at all the turmoil in the markets right now, rates, it seems like it's catching up to a lot of founders and entrepreneurs. And so not at the level you're talking about, but at the kind of smaller startup level, I think there's about to be a lot of consolidation going on, and people with money in the bank are going to be able to do well with all that.
Yeah. I think as far as that goes, it is all of the ones that you haven't heard of, that there's just, oh, I work for a startup, I work for a startup, I work for a startup. And you hear it all over the place. And there's all, you know, hundreds of these companies that are just floating around out there.
There might be some spectacular blow-ups. Maybe not along the lines of WeWork, but there might be some ones that we're aware of. And by the way, on the WeWork note, like Adam Newman's totally going to buy that company back, right?
That's what we're talking
After
about.
bankruptcy? Yeah, that's totally going to happen.
The golden parachute, and then, it's like, oh, I'm going to buy back my own company for super cheap.
Yeah, totally going to.
Just talk about getting out at the right time. So just the one note on the in-person aspect of this was that more than 55% of audit partners surveyed say that they expect their team will spend more than half of their time together, be that at the client side or at the firm's office. The number of partners with this expectation has more than doubled from last year, where less than 25% of the audit partners surveyed in 2021 had the same expectation. On the client side of things, 43% of preparer respondents expect their finance and accounting teams to spend 50% or more of their time together on site, supporting the audit during peak times, which is an even bigger jump from less than 15% of them having expected this last year. So the overall sentiment, just as an entirety across the finance and accounting industries and businesses probably as a whole, is we're getting back together.
Yep.
We're getting the band back together.
It's better together.
So have you read it? Reddit's always kind of talking about the same stuff. So this one is a little bit different. We got this from the startups Reddit, and I felt like it would be a good opportunity closing out the year with a little segment called Ask a Founder, as I like to name it. Somebody had asked me, why do startups post false customers and customer numbers on their marketing pages? And anybody with common sense can be like, well, they're trying to beef up the looks of how it is. And they write, this is from New Energy 21, is this a thing? I'm doing market research on some competitors in a niche, and a few of them are listing massive customer numbers, over 10,000 on their sites, that don't seem to line up. It's a 90% B2B and 10% B2C vertical. For my due diligence, the competitors in question are small startups that have been around for less than a few years. They don't have VC funding that could explain a massive customer base via either headcount or the customer brand logos that they listed on their sites seem tangibly related to the vertical at best. So have you seen this in the marketplace? Have there been like competitors that try to come up against FloQast perhaps from the bottom end, that they're trying to like tout themselves as bigger than they are?
Yeah, I mean, I'll speak just more broadly. I mean, not in our space specifically, but it's definitely a thing. Like, people will fudge numbers on their marketing website and just try to make themselves look bigger than they are. That is a very common thing.
Is that illegal?
I guess depends on how egregious it is. We never did it because my general take on it is, the argument for it is, I want to get them in the funnel, get the demo booked, and we'll go from there. My general take was, we're in an area where trust is very important. If we lie about logos on our website and then that helps us enter a buying cycle, by the time we get to the bottom and they ask for a reference call or start asking more questions and realize we're full of shit, they're probably not going to want to work with us and not trust us. And so to me, it's never good to overmarket. And it's not good to overpromise with anything either. So we were always very good about it, like getting permission to put people's logos on, though. We followed, we were very buttoned up with all this stuff. And I remember one of our partners, I don't want to name names.
Yeah.
One of our partners claimed to have 80,000 customers or something really insane. And I realized the way they did that was they sold to CAS firms, CAS firms around FloQast. So one CAS firm at FloQast might manage a few thousand small businesses. Do we count that as one client or 3,000 clients? That's where you can start to get creative with shit, right? And
yeah.
I'm like, this is where being an auditor really takes over. I'm like, that's not no, it's one customer for us. I'm not going to sit up there. It's because we have 2,500 actual customers today. Like I count CAS as one, and we have 2,500 of them. If you want to blow up to CAS, I could sit here and claim we have 20,000 customers using FloQast, but that's just very misleading. It's not representative of who we actually sell to. 20,000 businesses in our target market would be extreme market saturation.
Yeah.
And we'd be like, oh, what do we do? What do we do next? So yeah, it is common. I think it's very much segment by segment specific too. There's different levels of shadiness based on who sells to what type of buyer. Is something else I've noticed within this world. So fake it till you make it might work with some buyers, but not with our buyer. And it's not in our DNA to be doing stuff like that.
So early on as a startup, so I want to take you back to the early days. How do you build that? And how do you even because I feel especially now, we live in a world where people live off of the reviews, right? It's all about go on Amazon. If a thing's got 2 reviews, I'm like, I don't know if I trust, this place has only got 2 reviews. Yelp places, I'm like, I don't know if I trust that restaurant, doesn't have any reviews. So places are huge on getting reviews, making sure that that's in there. You have that validation from others in the marketplace. How do you get things going when you don't have that to begin with? Wasn't your first customer your mom's friend, hair salon or something like that?
That was my mom. No, she was a part-time CFO for a skincare company. So technically it was a skincare company, but yeah, she bought it for them. But that's the hardest part of this whole thing is finding those first, 10 customers to take a risk on you and go from there. And it's all personal network. This is where investors can be really helpful for us. All of a sudden we get plugged in with a lot of CFOs, more than I had in my network. And so that was really helpful. This is why a lot of companies start off selling to software companies. Software companies are willing to take on a little bit more risk than your company, an average company that's been around for, call it 40 years or something like that. So that was everything we did. It was let's sell to smaller companies that are in the tech world, leverage our network as much as possible, get our first 10 customers on, make them really happy and make them referenceable. And then that's how you build up the trust from there and put a couple logos on the website as you go. But yeah, upfront is just very, very personal, get to know you, more relationship-based stuff. And then as you scale, it becomes a little more transactional with sales reps and all that kind of stuff. But
yeah, once you hit that momentum where you can really just start to ride it, that's what you want to get to, but that's the hard part to get to.
Sweet. It is very hard.
So
some ways you never get there.
It's always an uphill battle, and that's what's concerning. But what's really concerning is how much it would cost for a day without the internet. This is from Accounting Today.
All right, let's just forget the money for a second. What happens? Does everyone know it's only one day?
This sounds like it'd be a good movie plot. I think chaos breaks out. That happens when there's a blackout, when there's not entire power out, but there's just a blackout. People start to do crazy stuff. I'm imagining something like The Purge.
That's
how I'm envisioning.
Is that in a world where people know internet's back after 24 hours, or there's this uncertainty that the internet may never come back?
I think people do it no matter what. As soon as they lose the internet, I don't
have anything to do.
They just, it's all is lost. We lost the internet for 15 minutes this morning here. And I was like about to get on my scooter and go ride around and check on door to door to be like, you guys have the internet? What's going on? Is this a major issue? Is this a crisis? What's happening? We rely so much on being able to go online. It's integrated to everything. So the answer for those listening who have not heard or not seen, a day without the internet would cost estimated $43 billion.
America's number one at $11 billion.
America is number one. Then China would account for $9.9 billion and the UK at $3.2. So those three countries taken together account for almost half the losses experienced in a single day.
Wow. This is quite the study, I'm sure. Yeah. We'll see if I don't know if it's materially correct or not, but that's a big number. And just thinking about like quality, money aside, just what people would do in that situation is fascinating to me.
I mean,
things online. Does this include cell phones, presumably? Like we got to throw in, you can't use your phone anymore, right?
Right. Well, I'm wondering if this study actually accounts for actual data coming from satellites, or if it's just referring to, like would Elon's Starlink work? Because that's a different internet type, right? He throws up his Starlinks all over the place, and I don't know if they're factoring that.
I mean, everything is driven by the internet. It seems like today. So is this effectively just one day of the world economy?
Yeah,
right.
So.
I mean, you could probably say, I guess there's
the oil rigs could probably keep going, right?
On. Yeah, mines are still getting mined. There's stuff happening still. So this is probably just a very material percentage of the overall world daily GDP.
Yep. And it kind of just shows, like, what I found really interesting is that in less reliant internet areas, obviously they have lighter losses because they're not as impacted by it, but like oceanic islands, like Marshall Islands and Micronesia, they would have like the most minor losses. Like these countries would lose no more than like $50,000 a day. Now, I don't know exactly what their gross annual day is, but if just say it's a bunch of people farming, just picking crops, or they're sowing stuff, or
and they're
weaving baskets,
and they're way happier. They're not getting depressed on social media, and then they're fine if the internet goes out.
Well, that's the interesting meta ethical thing about the internet is it does bring you closer together. It does present you with a lot more opportunity, but the risks are also highly associated with it. And I don't think one mindset can oppress its mindset onto. And some people might be happy. Just I don't need this. And it's like, yeah, but your life could be so much better. And I don't know if you ever heard the story about the fisherman who was down in Mexico, and he was a businessman who came down, and he was out there fishing, and he talks to the fisherman, and he's like, oh, well, what do you do on a daily basis? He's like, oh, I go fishing. He's like, well, why don't you go catch more than just one fish? He's like, well, I only need to eat one fish a day. He's like, yeah, but if you catch more fish, then you can come back and you can sell some fish. He's like, well, then what happens? Well, when you sell some fish, you can use the extra sales to buy more boats. And he's like, and then what? He's like, well, then you can catch even more fish because you can hire people, and then you can have a whole business, and then eventually you can go on the stock market and do this whole thing. He's like, and then what? He's like, and then you can come here and just like fish every day whenever you want. He's like, it's what I'm doing anyway.
That's really good. No, I have not seen that.
It's the full cycle, because you do this whole entire thing to create this complex life just to go do the thing that you wanted to do anyway.
Mm-hmm. Wow. That's deep. I like it. This topic got deep.
Yeah, we did get deep. So things that are also going deep would be some of the schisms in this chart from the Wall Street Journal about Americans increasingly getting paid for not doing work. And this is, again, where I talk about using that audit skill, using that accountant brain to go beyond, critically think about where some of this sort of comes from. This chart shows a dip correlating with the amount people get paid with the number of hours worked, and it kind of sticks itself along evenly. It tracks until you hit the pandemic, when all of a sudden there's sort of a flat line of pay. Actually, it jumps up because of the stimulus package and PPP, and the amount of work plummets. And then I think you had a situation where people came back to work and were like, well, I'm working more now, so pay me more. And they were comparing how much they were working to how much they were working when there was literally nothing to do. And that's how you end up with the schism. I think what's interesting is you see this 2020 drop, right? Where all of a sudden the pay actually goes up while the amount of hours worked goes down. And that's obviously because businesses were continuing to pay employees rather than lay them off, because there was the emergency stimulus packages and PPP and all that went out. So they inject money into the economy to help people have money.
Yep.
And nobody was actually doing any work to earn that money because they were stuck at home. And this is before you had kind of figured out how to do the whole remote working thing, and that had become normalized. And so pay remains flat, amount of work goes down. Now all of a sudden, amount of work goes up, but think of how quickly humans adjust to a new lifestyle. We're adaptive creatures.
Yeah.
So suddenly you get used to working 30 hours or 20 hours or part-time or not really working at all. And now all of a sudden it's like, oh, you want me to work? Well, you better pay me more. I'm not going to come back for what you should have been getting paid the whole entire time. So, and then they talk about the labor shortage and there's not enough people to work. And so they say, oh, well, we're going to pay you more to come back. So it's using an adjusted scale that's based off of the sentiment of like, well, I'm working more, but no, you're just going back to where you were, but you want to get paid more for going back to doing what you were already doing just because you got conditioned to get paid the same amount to do less.
And dude, this chart is killing me. This is like the Wall Street Journal just full of it. Look at this y-axis. It goes from 32 hours to 35 hours. You have a 3-hour gap in that whole thing. So we're sitting here talking about over the course of 2 years, the amount of hours worked has gone from 33.2 to 32.8. A half hour of work. Who cares? Oh my gosh.
Scalability.
I'm just more annoyed. This
Yeah.
is a freaking clickbait chart that's thrown up there, and it's like numbers don't lie, but people lie with numbers and putting them in charts that show way more movement than there actually is. This is since 2006 to today, this number's gone down by an hour and a half, and that's 17 years of data.
Yeah. See, 17 years of data. And
I got the same thoughts on the next chart you're going to share that I was getting fired up about already.
Yeah. Well, so the pay remains flat and the amount of work has gone down slightly. And I don't know, on a large scale, perhaps.
Okay. Let's take like a big step back and look at the 17-year trend. So you have paid, you got from 34.4 hours up to like pretty much consistent over time is what you're saying, right?
Mm-hmm.
And then on the work side, that number, a fairly sharp decrease relative to flat pay over time.
Yep.
If we want to just buy the chart and the movement for what it is. But I would argue you take a big zoom back, make this a 0 to 40 number.
Well, is it okay? Is it?
And who cares?
So is it? I mean, so it's obviously saying it's marginal amount that it's going down, but is it still on a testament of sorts to the shifting culture around work? And
no, totally.
Yeah.
I would say, but going back to 2010 or 2006 because there's so much mucking it up along the way. That's why I like at least a little bit of a step back. But even that's not. I mean, this is coming from a guy who works a lot. That to me feels pretty immaterial. But maybe for the average person, like. Just 1 hour of work.
Well, just think about on a large scale. Just think about on a large scale, though. A half an hour of work times a lot of employees times whatever. Just say $30 an hour. That's
fair.
That becomes a lot. So
piles up.
But let's get to what you were really getting worked up about.
Individualized about it. Yeah, here we go.
Which is from the Morning Brew, and this is a claim. They claim it is a huge win for the work from home movement. Remote-friendly workplaces grow revenue faster. This is actually requested to be placed in by John Siegel.
Oh, John Siegel. All right.
It's like, this one might be good to go with the Americans getting paid for not doing work one.
Yeah.
Employers providing more flexible work arrangements outperformed others. And what was your hot take on this?
I'm more fired up around Morning Brew's positioning of it, saying it's a huge win for the work from home movement. That means that like Morning Brew interpreted this as by having a fully flexible work environment, you are driving more revenue. And I would argue it's not causation, it's correlation.
Mm-hmm.
What type of company has the most fully flexible work environment? It's going to be like a software company for the most part. What companies grew the most from 2020 to 2022? Software companies ripping far and away, like not even close. And so I'm not surprised by this at all. That's like, no shit.
Yeah. And also
the only thing revenue growth has from the non-fully flexible is probably a lot of like inflation growth.
Yeah,
from consumer prices going up on various things that are being manufactured and made and produced and all that kind of stuff. Meanwhile, us brats working from home building software, our companies grew like wild and we've worked from our laptops at home.
The other thing too is it's fully flexible, which means it's not fully remote. It's fully flexible.
Yeah, what does that mean?
Which in my interpretation of fully flexible means you can work from home sometimes and you can come to the office sometimes. And I think hybrid is the golden recipe anyway. Where you can get the best of both worlds. If I have stuff I need to do that day and take care of at home, then I don't have to lose productivity on a commute. I could still take care of my personal stuff and I could still work, but then the next days I'll come into the office.
Like if someone asks you, is your schedule fully flexible or not fully flexible? You'd say not fully flexible, right? What's your answer?
For me, personally, I would say fully flexible.
Okay.
Yeah.
Even though you have to be in the office, like, to do our podcast occasionally or be for.
But I don't think, on next Monday I don't know if Monday's a good example, but like, I don't know, say tomorrow, I don't have it's the day before Thanksgiving. Maybe I don't want to deal with the traffic.
It's flexible because you can reach out and be like, hey, I'm traveling. Can we do this podcast remotely or can we shift it around?
Right. I mean, so
it's like technically flexibility around there.
And I think it's regarding flexibility on like on a daily or weekly basis. Like I have to be physically here for certain things that I have to be here for. But the rest of the time, like if I'm going to New York for a week, I can go do that and still work. And then I can come back to the office and work. And then I can go away and work. And you can do it wherever, whenever, and you could still come in. And there's requirements to come in sometimes when it's needed, but you also aren't required to be in every single day. So
Amber and Ashley, though, not fully flexible.
Yes, I would say that. But anybody who has the option to work from home, sometimes I would say is fully flexible. Yeah, so I can say anything.
In that case, then this is like so much driven by tech companies, and tech companies are the fastest growing revenue companies in the world.
So things that are not growing revenue.
Causation or correlation. These charts are always, sorry, I'm on one right now. I'm pretty fired up about how charts can be used to lie to people.
Well, it's good to keep in mind, especially put that auditor brain to work when you see these things.
Yeah, it's unhealthy.
So this one is from Outkick, and Arizona Wildcats have a $240 million deficit due to financial modeling mistake, which could mean cutting teams.
So it's on the FP&A team.
Yeah.
Not accounting.
Not accounting.
Come on, finance.
So this is the story everyone's been waiting for. I feel like when these things pop up, it really highlights the importance of having people who understand how the books work, how to do financial modeling, understanding and interpreting numbers properly, knowing that you can't just plug things. Like there's got to be an explanation for it, and finance is notorious for plugging.
Higher education also has funky accounting.
Yeah, I
think it's more akin to government accounting than
the not-for-profit and governmental. So there were significant miscalculations in the university's financial modeling. Essentially, Arizona's modeling of their revenue and expenses was off by $240 million. And the annual budget of the entire athletic department is $100 million, which means that's making up a massive gap that could lead to several teams getting cut just due to the size of the athletic department.
Whoa, because we were looking at the full price. So their total budget's $2.3 billion. So just like on the company, the university's whole budget, they were off by more than 10%. But we didn't talk about this one. So how...
They thought they had reserves to spend money. And so athletics is where so much is spent, especially at these large universities that have all these sports programs. And I worked at a college, and that was like a huge endeavor when we were doing a D1 consolidation. We had to take a D3 school and a D1 school, consolidate them into one single D1 school.
Oh, interesting.
Because there was two different campuses that operate. It was a really unique situation, but there's LIU Brooklyn and LIU CW Post. Okay. And they were originally two different colleges. Eventually they became one college, but still operated as two separate colleges. And then they integrated it together. So you could take classes at either one technically, and certain sports teams that were duplicates basically just got consolidated. If you were D3, you were moved up to D1. And if you were D3 and the other one was D1, like if you had the D3 here and there was no D1 over there, then you became the D1. And if there was a D1 there and a D3 there, then bye-bye D3.
Yeah, you had to try out for the squad?
Yeah, basically. Okay. So anyways, there's a lot of money and a lot of calculations to sort of go into this, but in order to have a successful sports program, you have to spend a lot of money on the recruiting and building the program. And everybody knows that these sports people, and I know because the coaches would come to me as budget director and be like, we need more money for recruiting and for this. And I was going through each sports team's budget and what do they need to be successful.
Do they want cash? Bags of cash for recruiting?
Yeah, a little bit of that. Definitely wanted a lot of travel. They wanted a lot of accommodations.
I can't believe how much some of the football players are making now.
Yeah.
That blew me away. I was just learning about like the salaries. This kid from USC is making like $30 million a year.
What?
Yeah. Apparently, I was just talking to a guy who used to play at Michigan. He was back there for alumni day. And he said, you walk through the parking lot, it's like an NFL parking lot. And he said that there are like kind of entry-level kids there, like making what he made in the NFL as a rookie.
Is it from sponsors and endorsement? I mean, where are they getting paid from?
Alumni donate to some fund, I guess, called in the NIL. And so different universities with bigger endowments have larger amounts that they can use to pay players to work there. And then there's also, they can do endorsement deals on top of it.
You're paying players to work. Your students are being...
That's their job. You're paying them to do... Yeah, it's like you're paying them to do a job. And so I guess kind of the minimum at Michigan's like $250,000.
That's ridiculous. That's absolutely ridiculous.
So it's going to create a world where there are going to be a lot of kids making more money in college than they make in the NFL.
And for everybody listening, if there's something that they're going to need, is they're going to need financial advisors and accountants to help them with managing this money. So opportunity.
So he was saying that at Michigan, they're really good around financial planning. So like when you join the school, you're required to go through all that. It's like, look, 18-year-old kid, here's $250,000, but here's a CPA, here's a wealth advisor, here's how you do this. Don't spend more than you make. You're probably not going to make it in the NFL. You need this for the rest of your life. Like, figure it out. So they're very good around, like, it's not just handing a kid a bag of money and they're going to blow it all from there. They try to be good about it. I mean, who knows what 18-year-old's going to do?
Has the NCAA, I mean, I'd be curious about if the NCAA has actually enacted caps. Like, there should be salary cap. Like, if I'm a big school and I can afford to pay somebody a whole bunch of money, that's not going to be fair to the lower teams. That's the one situation where I will be somewhat anti-capitalist when it comes to like the
sports.
Yeah,
you want some fairness.
You're talking about college. It's for the entertainment value. I mean, nobody wants to watch one team just blow away the other team. Tires.
It's going to be Texas, Alabama, like all the biggest donors. And Michigan has a shockingly good donor base. I wasn't aware of that and how big their fund is. It's one of the biggest ones in the country, and it's.
So what happened here was essentially that, right? Mm-hmm. So essentially, they thought they had all this. They knew they were spending a lot.
That's what I was wondering. Like, were they in some ways banking on something here, like for that they just got? I don't know.
They thought they had the money.
I'm trying to make excuses for it.
They thought they had the money. Surprise, they didn't. Mm-hmm. And now they overcommitted, overspent, and they're in a situation where they're like, well, we might have to cut some sports teams in order to make up this deficit, because that's just a huge department budget. That's one of the biggest ones, if not the biggest one.
Who's going to get cut?
I mean, so this is, and I just use this to highlight the importance of just paying attention to detail and questioning things and exhibiting professional skepticism, all the traits that make a good accountant.
Yeah.
A good accountant.
Like, and this is at the scale where a Flux should have picked this up.
Mm-hmm.
Like Flux analysis, are you doing your year-over-year budgeting? Like, how in the world do you not catch a $250 million increase in your budget and ask questions around it?
Yeah. So we're not doing brain surgery.
How's their accounting program?
I'd be curious. I mean, their flag is an A.
It's not for accounting. A for accounting.
A for athletics. We're not doing brain surgery, but there are real human implications when it comes to finance, and these young adults are looking at their college dreams just dissipate in front of them, and because somebody made an error, and a few people made an error, and somebody didn't review it. And we talk about how white-collar crimes turn into red-collar crimes. Like, this is the type of thing that causes that. I mean, I don't think this is to that extent. Not to that extent. But you could imagine a situation where somebody is banking on something because they're relying on financial data or information that somebody has conveyed to them, and that gets just pulled out from underneath them, and they're left with nothing that they had built their life upon or made their plans around. And you do that, desperate times call for desperate measures. Yeah. People get desperate.
And so, quick plug, we're working on a podcast series around fraud stories. And I hear, where are you guys at with production there?
Yeah, we are in post-production right now with a true crimes podcast. It's going to be called the Fraud Files. And it is taking you through a true financial crime that actually happened. And it's going to be really cool. So right now it's in sound design because it's going to bring reenactments of real situations that you get to transport back into and be a fly on the wall when these conversations were occurring, all the way up through the court case and the sentencing. So it's going to be exciting, and it's going to be available for a CPE credit.
Yeah, CPE credit, very cool. Working with Kelly on it. Also, it's when you guys brought the story to me, I was like, oh, that's a really good one. So I hope people get to listen to it.
Yeah, so we're looking forward to releasing that next year, so everybody can.
Yeah, when's that coming out? Q1 2024?
And probably beginning of Q2. Yeah.
Okay. Nice.
So a little post busy season enjoyment.
Yeah. Add back to your professional skepticism for the next year.
Exactly. So how should we account for memes? This is a little funny one from the Big Four tweets. Reads email 10 times, checks spelling, rewrites. Partner, thanks. Send from iPhone.
Yeah, THX. I remember the first time you
How important is text language? Like, is this something, how much do you care about?
I don't.
That.
This has been something that's blown me away. Like when I entered the workforce, it was like everything formal, that kind of thing. And then you started getting these sent from my iPhone, excuse typo stuff, and it's just devolved into like nothingness now. The one that blows me away is the amount of smiley faces that are exchanged at the professional level. I'm like, it's very interesting.
Yeah.
So yeah, I'm not surprised by this at all. It's crummy. Like I don't type THX. I take the time I capitalize the T and spell out thanks. Like I do that. I guess I'm a little old school with that kind of stuff.
But it is really interesting.
It's close to home, man.
It's interesting how every person has a different approach. Like some people, like Greg, our controller, is very straight to the point. Yeah. It's just big letters, sometimes all caps, right?
You just have big font.
It's just a big font, and it just gets through. It's like, why did this happen? And like that, and like you can almost like hear it, but it's not even it doesn't actually always necessarily line up with the personality of the person. It can get really confusing. How far deep do you read into what someone says? Oh, they didn't put a smiley face. And this used to be reserved just for like kids who were texting, and they're like, oh my gosh, they said multiple Y's. That means they like me. And if they didn't say that, but there is like a real stigma now behind this text conversation, which has become so normalized. And
so I found out I was typing okay instead of K or like KK. And apparently that's me being like mad about something.
Like, okay.
I learned, I didn't realize that. I was like, oh, okay. Weird. I was just saying, okay, like the same as a thumbs up, I guess is what I'm looking for. But that apparently was me being a jerk over Slacks for years on end. I learned about this like years into it.
The dreaded K. That was
what
scary.
Does that mean? Is that good or bad?
If you just say K,
yeah. What does that mean?
It's interpreted as you're being short. Are you being short with me? And so you interpret the letters as the actual tone and the mood. So by you not saying okay, O-K-A-Y, you're actually being short.
Why is KK the friendlier one?
Because it shows you made an effort to click K twice, which is not as short as just a singular K.
I always viewed that as I get it. Like, yeah, I got it. I got it. Leave me alone. That's kind of how I
kind of got it as like okay. Like a little click.
God, this is so ridiculous.
But the fact
this is why talking to people is great.
Is important.
I go back to
you don't have to play all this.
Tone over Slack, email, all this kind of stuff. Helps if you know the person because you can like hear Greg saying his email and you know that he's not being like a huge jerk about it. But I've actually looked back in time at some of my emails and I am like, whoa, I'm real short with these things. Like it's very much to the point. Every superfluous word is cut from the email and it's like, arguably too direct with a lot of them.
And this is the thing which I'm wondering, like I said, it started off with text messaging type stuff because everything used to be formal. When everything was formal, it was easy because you didn't have to be you didn't have to be personal with stuff. You were just, this is a business email. I'm sending something. I'm making a request. Thank you. Call it a day. Now, since it's become like the predominant form of communication, it's taken on its own realm where you have to try to come off and express what your tone and what your mood is and the way in which you're saying it is so important. But I think we might end up like moving through this before we ever actually resolve and come to a consensus as a society of like, right now it's just, well, I know that person always is just very short with their stuff. They don't mean it. That person I know and they're very fluffy and they like to do their stuff. Both people could be just as happy, but it's going to come off differently. Before we even come to a consensus on like, are we going to normalize this? We might move past it. I'm thinking of things like with Neuralink, right? And they're talking about the ability to communicate thoughts directly without having to speak it, or there's no room for interpretation. It's just transferring of thoughts. And I don't know, I could see with AI and stuff like that, how maybe this kind of becomes a moot point because the future of communication could just be us thinking at each other.
Turning into a sci-fi show here.
Yeah.
I don't know if I like that. I think you're right for what it's worth, but I don't know if I like that.
I just think about different technology with sensors and the meta glasses, and VR goggles and all of that sort of stuff. And we might move past texting and typing as a thing, because you might just like think the words and maybe it just gets sent.
We will be there. It's just a matter of time. Is it a 3, 5, or 500 year thing? I don't know. But
and while we're on the AI topic, we'll just give the little plug for those in the audience who are listening who are not up to date on this area, which depending on where in America you live and depending on how up to date you've been on AI, it could differ. But Sam Altman is out as ChatGPT, OpenAI CEO, and this is a shock to the whole world. There's a lot of theories about why he's not there. The most predominant mainstream one is that the not-for-profit board didn't like how aggressive of an approach he was taking on making OpenAI profitable, which was move fast and break things approach, which they said is just very dangerous to humanity. They wanted to be safe. But 700 employees as of recently just signed a document saying we're not going to work anymore if Sam's not brought back in. So by the time this comes out, I'm sure there'll be some progress on that front, but this is just something that's absolutely crazy.
Yeah, it's like a next level thing in the tech world right now in our little tech bubble here, but there will be many documentaries made about this by all the streaming services. I can't wait to watch them and see how this thing plays out. But like the employees revolting at OpenAI, these are employees who are the hardest to hire people in the world. Like, so, dude, some of these AI people, they negotiate contracts like athletes.
Wow.
It's like 5 years, 25. That's it's like this is a whole different world that you're in. So if you have 800 of these AI experts, who probably represent a material percentage of AI experts in the world, all revolting, like you got to do something. But Microsoft, what a move. They hired him, even though they're investors in OpenAI.
I was like, all in the family.
I was getting feedback, and I thought this was really interesting thought from our CTO, Colin, on it. He goes, I'm like, well, if they just start an AI function and like it burns OpenAI to the ground, they lose their whole investment and all this kind of stuff. And he's like, yeah, but they own 100% of it. And it's well worth whatever money they invested in OpenAI to get access to the talent because that's how valuable they are. And I was like, he's like, yeah, so just think of it as like sunk costs. And now I can hire all these people who were previously unhireable because they loved OpenAI so much. I got Sam for whatever he costs, and they all want to work for Sam. It's not about OpenAI. It's about Sam Altman. And I was like, that's a really good point. And what a judo move by Microsoft if they pull this off. And not financial advice, but Microsoft's going to be pretty well off,
It's kind of like buying back your own investment. So it's
kind of,
I mean, they foster the growth. It's buying your own farm system.
And it's good for them either way. If OpenAI figures it out, they do well and make money there. If they don't, it's because they pilfered OpenAI's talent and they now work at Microsoft, and Microsoft's the one with all the compute power that OpenAI needs. And so if they have the talent and the compute, then they're in a really good spot to win.
Microsoft's the winner of the week.
They're so good at business.
They are really good.
That's it. What a killer company.
Speaking of big announcements, this is from our buddy Jason Statz. I just thought this was funny because he used, I believe, AI to generate this image.
Oh yeah, that's.
I don't know if this is legit or not. I asked and he's not responded. But I thought this would be a kind of cool fragrance line, Financial Sense.
Yeah.
And it's a perfume, or not a perfume, but a cologne perhaps. Could be a perfume, could be a cologne. They'll have both versions. But
think he's a Midjourney user or the Dolly, the other one.
I think I could be a Midjourney guy.
Looks like Midjourney. It's a nice picture.
Yeah, Financial Sense. I would. Would you get Financial Sense maybe for the holidays?
I'm not a
cologne guy.
No, I don't wear cologne. But if I were into cologne, I'd probably give it a shot at least.
Well, maybe if you wore cologne, more people would come to the office.
I'm scarred from you might be right. I'm scarred from a middle school experience where me and my buddy were running through the department store and then for some reason like got into a perfume war as a stupid 13-year-old, and like the scents are still like we're just spraying all over each other, and like, dude, to this day I can't walk through a perfume or through a department store like that. So I don't know. Crazy. Would you buy that?
I would try it out.
Yeah,
I would try it out. I like there's something about the niche stuff like that, which I just was like, that was clever.
If anything, just have it on display and you're on your desk or something, or like in the office is a little Financial Sense thing.
I mean, if that's not legit, I might go start my own line myself. I enjoy smelling nice.
Did I tell you about the time I saw Jason in the wild?
Jason Statz?
Jason Statz
in the wild? No.
Yeah. We were at the Lego convention in Pasadena.
Why were you in the Lego convention?
So I have a 6-year-old.
Oh.
So we're there with a bunch of our friends, and we're just like, you go to this Lego convention, they have a bunch of stuff set up. I look over, and then the checkout line, buying a bunch of Legos. This is Jason's.
Wow. So
Stats
Stats is a Lego guy.
Yeah,
Okay.
into Legos. Who is it? This is
What
what
happens.
Legos also.
You build a firm, you sell it off, you run your online community, and you got time to make Legos.
So as much as I said I have a 6-year-old and that's why we went, I do still love Legos.
Yeah.
I'm not gonna.
Well, you're a
pretend
builder.
like
You're
I'm
born
better
a builder,
than that.
Mike.
Dude,
You're born
Legos are the
builder.
best. You did Legos as a kid, right?
Yeah, yeah.
I have to imagine.
I'm a big Lincoln Logs guy. I was
Yeah.
a big Lincoln Logs guy. I like to make the wood houses and stuff like that.
That's cool.
But speaking of running into people, though, I thought this was interesting. I just wanted to throw this on the concluding cycle here. Is Ryan Reynolds was at QB Connect.
What?
Yeah.
How much they pay him for that?
I would imagine a lot, or he just did it pro bono. I don't know anymore how much. Sometimes people are doing stuff because they just are about it. They want to get the name out there. They've got enough money, so they do it. I imagine he got paid. But yeah, Ryan Reynolds was at QB Connect, and so I was like, the industry is starting to get with it. I mean, we had Kate Flannery. What was it?
Performs
NetSuite?
very well at the booth. Yeah.
Performed very well.
We had a 3-hour line to see Kate at the booth, and she's great. People love seeing her. If you ever see FloQast at a conference, like definitely meet Kate. She's awesome.
Yeah. And they had, QB Connect had Ryan Reynolds there, and I was seeing everybody in my Twitter community taking pictures.
In what
of Ryan Reynolds.
capacity? Was he like signing
actually a
autographs
keynote
the way
speaker.
that Kate was? Or, keynote speaker?
Yeah,
for
he
it?
did keynote speaking. Because the interesting thing about Ryan Reynolds is like, this is like actors doing it right, where they parlay the fame into building brands, into feeding more content that they're originating on their own. They're making their way into the business realm. They're becoming more legitimate people as opposed to just some celebrity that nobody takes seriously.
Yep.
And I think he's done that. I mean, between buying the soccer team, between having the tequila brand, and then you get to be your own promoter of your own stuff. And he looked pretty smart at QB Connect.
Yeah, totally. Nice. Well, yeah, if you're into business, you can easily tie it into there.
Yeah.
Oh, my brands use QuickBooks Online for their stuff. What's the vodka line that he's involved in? Is it the Casamigos? How do you say it?
Is it
I'm
Casamigos?
not a drinker. You'll have to excuse me.
Is it Avion or
Oh, okay. We're already too far.
yeah.
I don't know. Too far.
whatever? But yeah, so anyway, it's cool stuff. So things happen in the accounting industry. And yeah.
Would you say we elevated accounting today, Drew?
I think there's a lot of elevation for accounting that comes out of today. Yeah, because it goes back to, I think, the theme of the year, which is what are we doing to elevate the profession by changing the perspective of what it means to be an accountant. And there's no reason that qualified and intelligent accountants can't be those finance professionals who are actually doing the financial modeling properly for the University of Arizona. There is no reason that they can't be helping out when it comes to the economy and making sure that the books on the U.S. bonds and governmental accounting all checks out so that our government actually is in a better financial situation. So we have a better economy and deal with inflation properly there. And then just the overall faith in tech or business accountants stepping up and showing that they can do more than just regulatory bookkeeping or just taxes, and expanding into those ancillary areas where the traits that you have as an accountant are valuable. All those things highlighted today, I say.
Great summary. Very nice.
So
I'd love to do a series on like government accounting. I think we should do some of those short videos or something.
we will find
how that works.
I will find a tutor.
Yeah.
And I will go back to college and take a
We have to have
class.
somebody. I'd be curious if you just put out a Slack to FloQast. Does anyone have government accounting experience? And we have so many accounts. I'm wondering if we have any. It'd be very telling if nobody had government accounting experience.
Yeah.
But fun stuff.
We'll find out. But yeah, we're looking forward to hearing everybody. Next episode will be our season 1 wrap of the FinTech Flow. That will be our 20th episode. And would love to do a little segment where it's answer questions from the viewers. So if anybody's got any questions, send them on over and we'll be sure to answer them.
Hopefully we can. Yeah. Well, happy Thanksgiving, everyone, in the meantime.
Yep. Enjoy. Thanks for checking out the FinTech Flow. As a reminder, this episode is available for CPE credit, and you can get that at FlowCademy or on the Earmark app. Details are in the description below.